Hello everyone, welcome again to the Accounts YouTube channel, and today we're just going to take a look at the subject of financial management, the topic of time value of money. Time value of money, as you see, and today we're just going to take a look at perpetuity. Now, in the previous lecture, I spoke about annuity. I spoke about ordinary annuity. Actually, I spoke about annuity due, as you see here. Yeah, so if you need to know about annuity, you can just go to the previous lecture, right? Right, what's a perpetuity? Perpetuity is simply an annuity. Perpetuity, it is simply an annuity whose cash flows continue indefinitely. Suppose, let's say, you are doing a certain business and you expect to receive a certain amount of money each year. Let's say, at year one, you expect to receive $2,000. Year two, $2,000 again. Year three, again it's $2,000. Then it goes all the way year 100, all the way actually year indefinite. It goes indefinitely. Let's say year 1 million, it goes indefinite, and then you will always be receiving 2,000. This is what we call a perpetuity. So when speaking of a perpetuity, you should encompass the following matters. First of all, when speaking of a perpetuity, you should encompass something like this, which we call indefinitely. You receive something indefinitely. You know, an annuity is an amount that is fixed. It has equal intervals, but it is received for a certain period of time. But perpetuity is just an annuity that, let's say 2,000, 2,000, 2,000, 2,000, with a given gap, let's say a gap of 1 year, but received indefinitely. An annuity can be received, let's say, for 10 years, 15 years, but a perpetuity is received indefinitely. So this is the main point here. So it's an annuity that is received indefinitely. By indefinitely, what do we mean? The number of periods equals to infinity. Infinity means extremely large, just like this. So in arriving, when speaking of time value of money, you always need to understand the present value as well as the future value. But here, you won't focus on the future value because since the perpetuity is received indefinitely, the future value will always be infinite too. So our main focus regarding perpetuity would be on the present value. So how do you obtain the present value? Now, as I said, on annuity, we said that we can have ordinary annuity as well as annuity due. But also for perpetuity, you could have present value of ordinary perpetuity. When speaking of the word ordinary, that means cash flows received at the end of the year. But when speaking of perpetuity due, when speaking of the word due, that means cash flows are received well in advance now. So at the beginning of the period, while ordinary annuity at the end of the period. So this is the main difference. But actually, the most common matter is usually present value of ordinary perpetuity. So how do you obtain this? So actually, by incorporating the concepts of sequence and the series in geometric progression, you arrive at this formula here. So simply speaking, the present value of ordinary perpetuity is obtained by taking A, that means that is an amount, a perpetuity, an amount received each year, divided by R, where R is the relevant discount rate. Or simply speaking, you could just say cash flow 1 over R. Anyway, here we're just speaking of a perpetuity that is not growing, so you don't have to worry a lot. So you can just say A over R, where A is that amount, that 2,000 that is received indefinitely. So in case you are asked to compute the present value of perpetuity due, that means you receive the amount at the beginning of each period rather than at the end. So if you receive the amount at the beginning, that means the present value would be much worthy. So you could take this figure and add something. You could take this A over R above here, and then you add A, because the present value, you do not need to discount the present value. So you could have just done it this way. Let me show you here. Let me show you here the proper way. You could have just done it this way. You could have said present. You could have just said equals to that A over R, which we stated earlier, and then you add A, something like this. And if you make the subject, you arrive at this figure here. You could just have as I told here, as I told you here, you could just have this one, but also you can decide to multiply by R and then divide by R. Yeah, it's actually the same thing. And then if you decide to get A over R like this, actually you would remain with something like this in the brackets. There you have 1 plus R, so it's all the same. So you can just use the formula above that I already prepared. So it's just like this. So today we're just speaking of perpetuity, let alone this growing annuity, just leave it alone first. So I would like us to go to an example where we take a look at perpetuity, the way perpetuity actually is done. So let's just go directly and take a look at how perpetuity is computed. Right, so just see the next lecture for this one.